So Tony, when it comes to property investors and landlords, what are the different taxes they need to be aware of?
Well, as people, and it's the same whether you own property or not, you've got to be aware of income tax. We all have to pay either PAYE or if one's self-employed. And they need to be particularly careful if they are or are about to become a higher or advance rate taxpayer, particularly if that's self-employed income. They almost invariably will overpay. And there's some horrible taxes with income tax. You get in the wrong place, I think you can get a marginal rate of 63% at times.
Oh gosh.
It's just, but you've earned the money first, so don't worry too much. You've then got more in your pocket. When they buy assets and later sell them at a profit, say a second home, you'll pay capital gains tax on that profit, less a whole slew of allowable expenses. Stamp duty, buy anything other than your own home, you're going to pay a premium of 3% on whatever the band happens to be. It's transactional, it is what it is. Anything which says, I can save you stamp duty, run in the opposite direction quickly, it's a scheme most typically, and you'll get it back eventually when you sell. They need to be aware of inheritance tax, state-sponsored grave robbery. As an individual, everything we leave to our descendants above the nil rate band, £325,000, excuse me, and perhaps something through their main residence, is going to be taxed at 40%. So, simple example, I have £650,000, I leave everything to my son, he will pay £130,000 worth of tax. And whilst you can get a bit extra relief from your home, once your estate goes over effectively 2 million, it starts to wash out the other end. So for a lot of people, that even won't even apply. And if you run a business, limited company in particular, you'll pay corporation tax on the profits that that business makes. So those are the main taxes. Oh yes, there's VAT, but that's a transactional tax. You can't help but pay it. So those are the main taxes that people need to be aware of. Excuse me. They've also got to be aware that by paying too little tax, they can create other problems. So let's say you're in a position where the best thing to do is to borrow personally, or you haven't sought advice and you are borrowing personally. You're going to have to prove your income. Rental income may not be fully taken into account, investment income or pension income may not be fully taken into account. So sometimes they will need to pay more tax in order to raise the amount of money they need to fulfill their capital growth or income producing goals. The other taxes can be successfully mitigated if you get ownership structures right.